Hello, Oracles. Well, what can we expect from the market this week, the week of March 10th, 2025? So, this week is not a ton going on when it comes to earnings. Earnings season is pretty much over, but we are still in extreme fear. Every time we get a little bit of a pop, we get a sell off in the same day. So, we've been seeing that fear greed index really kind of staying in that range that I've been talking about between extreme fear, fear, and neutral. And as soon as we get to neutral, we end up pulling back down. We haven't seen greed at all this year. So we'll see if we end up getting there. But right now, we just keep continuing to pull down further. Now, some of that is exacerbated by the tariffs that are coming out. And Trump did reiterate last week that yes, the tariffs are there for Mexico and Canada for 25%, and they could go up even more after this. So the market definitely sold off after that. And now this week, we're going to be getting inflation data between the CPI and PPI. So those two are going to be a direct reflection off of tariffs. Now, don't forget the tariffs, even though they just took place, aren't really going to be feeling the effects of these for a little while. So any information and stuff that we see when it comes to the inflation data and the CPI and PPI from last month are strictly going to be people's reactions to this. So there could be a lot of, buying ahead of time that is going to kind of push prices up because there's a false sense of demand that comes out for a lot of these goods. And what's going to end up happening is because there's that higher demand, it's just the whole laws of supply and demand. There's more demand than there is supply in a very narrow period of time, thereby driving the prices up and falsely inflating those numbers. So those will smooth out over time, but we could see that hit right now. And because of that, we are going to be getting that data coming out on Wednesday and Thursday. I'll get into the details on that in a minute. You end up seeing that, and that's going to kind of cause the market to be in a shock because, ooh, we didn't get what we expected because of these other factors that are out there. So again, we'll get into those numbers, the fear and greed index, and what else we can be expecting from the market this week. All right, so again, we are at extreme fear at 20. Last week, we were at extreme fear as well. We were seeing that 28 number. A month ago, we were in fear, and a year ago, we were in greed. We knew that because 2024 was a heck of a year. We were up over 20% in the S&P 500. So looking at these numbers here, we could be getting a thinning out. Now, doesn't mean that we can't turn around the end of the year, but just we've had a very rough start to the year this year, and it's starting to look similar to 2022, especially when you're looking at stocks like Tesla, who just cleaned out their bubble from the election. And there's a lot of bulls that are out there that are giving me crap for it. And I'm like, look, it's like the stocks that ran up from the election needed to come back down because all of that was just all sentiment blown up, and it's just getting back down to where it was. So now Tesla is basically back down to where it was prior to the election. So now we just have to wait and see. I'll get into another video about that later this week, but Tesla itself is just back to where it should have been prior to the election. Now we just have to wait for the Model Q to come out and see what happens there. But back to the entire market here, market momentum, extreme fear. And we broke below the 125-day moving average trend line as well. Now, we did that once before back here when it came to August when we had that Japanese carry trade scare. So we dipped back down and came right back up. This one has dipped down a bit further. So again, I don't know if it's going to continue or if at this point here we're going to bounce back up and test this 125-day moving average. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility, extreme fear. Safe haven demand, extreme fear. And junk bond demand is extreme greed. That is the only one that isn't greed, and that is typically because the entire market is down. So people want to get their money from somewhere, and they end up getting it from junk bonds. And again, there's not much going on for earnings this week. We do have Oracle coming out after close on Monday. We've got Dick's Sporting Goods coming out on Tuesday before open, along with Kohl's. Those two will give us a little bit more of a inside look as to what's going on with the economy and consumers. And then really after that, there's not much. We've got Adobe, Ulta. Again, there's not a lot going on. We're kind of at the end of the earnings season now. And so then looking at the economic calendar, there's nothing that is going to be going on for Monday the 10th. On Tuesday, we are going to be getting job openings coming out in the morning and optimism. So optimism could also give us an indication as to how the market is feeling. And then Wednesday's the big one. Wednesday, we get CPI that is going to be coming out. And so the CPI year over year, they are looking for it to dip back under 3% to 2.9%. Last month, we were at that 3%. So again, we'll be paying attention to this because if we end up going above that 3%, expect a massive sell-off. Just expect the market to continue crashing further down. If this comes in at maybe a 2.8 or a 2.7, we might end up seeing the market rally a bit. But again, I still think we're in such uncertain territory right now where the market is kind of looking for anything that's going to sell off. If we get any bumps up, that's going to be very short lived. It's not going to be a long term rally. We have seen that all this past week. Every time we get a little what seems like we may be turning around, we end up selling right back off afterwards. Then on Thursday, we're going to be getting the initial jobless claims as usual, and then we are going to get the PPI, the Producer Price Index, on Thursday as well. They are expecting this to come down also. We're looking at a 0.3% month over month versus a 0.4% last month. So again, we are anticipating inflation numbers coming down. Now, these numbers aren't bad. These numbers are just not coming down as much as we had hoped. And we're kind of stuck in this area, and we do want it to come down further. So again, this is giving us that indication that the Fed is most likely going to end up keeping rates higher for longer, which they had talked about previously. But going into this year, we did expect to get 6 rate cuts, and now we're only looking at 2. So if we can get inflation to come down some more, maybe we end up getting that. And then we have to look at the jobs and how are the jobs doing, because we're getting more and more claims coming out, and that's becoming an issue as well. So we just need to really pay attention to what is going on with the jobs, what is going on with the inflation. Is the Fed going to stay higher for longer with the rates, or are we going to get some indications that maybe they can actually start coming down on rates? Because don't forget, the longer that the Fed stays higher with the rates, the more chances that we're going to see a lot of other businesses end up falling and collapsing, because there's a lot of smaller businesses out there that require loans in order to keep their business growing, and getting loans at a much higher rate means it's going to be even harder for them to pay off those loans in the future. That there could end up causing them to end up collapsing, because we've now been seeing rates high for a couple of years. That's going to put a lot of pressure on these companies. Maybe for a year or so, these companies can kind of float that along, and maybe they get themselves into an adjustable rate where they can bring those rates down in the future. But if those rates just continue to stay higher, now they're going to have to be paying back these loans, paying back that interest. It's going to cause a lot of problems. There in turn could end up causing smaller companies to collapse. Those companies go under, more unemployment. Then other companies out there, because they're not hiring right now, people don't have jobs, just kind of causes that domino spiral coming down. And then, of course, people out there with consumer debt being as high as it is right now is going to cause even more problems, because people can't even put things on credit cards because they're already maxed out on their credit cards. Now they've lost their job, and now they have to pay for the normal everyday goods on credit cards even more, and they don't have room to do that. So then you end up with a even bigger problem out there. And then there's a lot of defaults on these credit cards. And you have the credit card companies that aren't taking it in, and banks start to have problems because they're not getting paid back on the money that they need to get paid back on. Major issues that could be happening because of all of that. So again, these are just very early sign things that I'm looking at right now. And I really, truly hope we don't get to that point. But these are just things to pay attention to as we kind of work towards that, because this is exactly what happened during the great financial crisis. We saw this, and there were a lot of these little signs ahead of time, but everybody was ignoring it. We had the stock market climbing higher and higher, which we saw over the last year, and people just ignored these little signs that were out there. And now we're starting to kind of see the market selling off a bit, but we're still a bit inflated. So again, we'll just kind of see what's going on with the numbers that are coming out in the data, but that's kind of giving us that indication of, we're still not in the clear yet. So even if we do see some better numbers, that could be nice, but we want to see that trend continuing as well. So that's all we've got for this week. Again, still some important things that are going to be going on, really kind of paying attention to, can the market make this turnaround? Can we get some better than expected inflation data? Can we kind of finally get ourselves settled? And again, I don't know with this administration, just because there's so many uncertainty and he's making some big grand changes. And because of that, we don't know how those grand changes are going to play out. So the market is most likely going to be in a kind of uncertain territory for the next 6 to 10 months or so as we get into the end of this year, just to see what is actually going to transpire for all of us. Because it could be about a year from now before we really see how this has all truly played out. So that's kind of what we need to pay attention to is, how are all these things going to be playing out, and really pay attention to what is actually happening with all of these. What is the effect of these things happening versus what is the market's reaction to that? Because the reaction to things isn't always the same as what is truly what's going on. We see it all the time with Tesla stock and a lot of other companies that are out there. Sentiment can swing the company and the stock price significantly more one way or the other based upon what the news is rather than what the intrinsic value is. So look at what the intrinsic value of these plans are that are going on, that Trump is doing and things like that. How is it truly affecting the economy versus how is the market reacting to that? Now, sometimes the market has an effect and a reaction that could end up transpiring in the future because the market says, well, historically, these things have played out this certain way. So we're going to sell off or buy up because of that reason. And then it ends up coming to fruition because of that. Sometimes it's a self fulfilling prophecy. The market selling off ends up causing bigger issues in the future. So again, it's just one of those things to pay attention to, which is what is the difference between what is actually going on and what is the reaction to what people think is going to go on. So that's just my little bit of wisdom for you guys at the end of this. And then one last thing I wanted to mention is my live streams are going to be on Wednesday evenings now. I have plans now going forward on Thursday evenings with some friends. So I'm going to be doing that. So Wednesday evenings will be now my new live stream. I'll keep you guys posted on that as we go forward as well. But otherwise, thank you guys so much for watching. I appreciate all of your support. Have a great one.